Ladies and gentlemen, good day and welcome to Archean Chemical Industries Limited Q4 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during this conference, please signal an operator by pressing star and then zero on your touch-tone telephones. Please note that this conference is being recorded. I now hand the conference over to Mr. Ram Praveen Swaminathan, Managing Director of Archean Chemical. Thank you, and over to you, sir.
Right. Good afternoon, everyone. Thank you for joining us here today, and a warm welcome to you all to our Q4 and FY26 earnings call. Thank you for taking the time once again to join us. I'm joined here today by Mr. Natarajan Ramamurthy, CFO of the company, Mr. Rajiv Kumar, DGM Finance and Strategy, and our Investor Relations Advisor, SGA. I hope you all have had a chance to look through the financial results and the investor presentation, which is available on our website and stock exchanges. I will provide an overview of the market conditions and external environment, cover some of the significant events in the past quarter, provide you a commentary on Q4 performance and FY25-26 performance, and outline some of our focus areas going forward. Just beginning with the market, I think overall demand for our products from our end key markets has been a mixed bag. For most of the year, demand from industrial salt has been muted, which has been reflected in a tough pricing environment for the product category, while demand for bromine and bromine derivatives has been positive in most geographies across the world. Competitive intensity remains high, especially on salt, with increasing capacity in multiple regions and some more being added in FY26 in Australia and some parts of the Middle East. The year that has gone by has also been marked by considerable uncertainty, volatility, and a continuously evolving external environment. Several macroeconomic developments, including the India-US trade discussions, the India-EU FTA negotiations, tariffs imposed by the US government, and more recently the Iran-US conflict, have influenced market dynamics across demand, supply, and pricing. While we have managed to navigate these conditions, the impact on our business cannot be overlooked. And therefore, this year has been fairly skewed, with headwinds outweighing the positives, resulting in a constant focus on recalibrating the business operations. In Q4, we have seen a heightened impact due to the US-Iran crisis. I'll cover that in more detail shortly. On a positive note, our key end customers and industry participants share our optimism about the future. We believe that in the categories we operate in, demand outlook in the medium term remains pretty positive, and we are very well positioned in terms of our overall value package. Looking at some key developments which have impacted our business during the quarter, let me first begin with our semiconductor business. Earlier this week, our subsidiary, 6M, has signed the fiscal support agreement with the Government of India for our semiconductor project in Odisha. This is a very important milestone for us as it now enables us to accelerate the financial closure and the execution of the project. Just to provide you a recap, we did do the groundbreaking ceremony at the site in November, and we have teams which since then have been completing detailed engineering, finalizing supply partnerships, and doing resource development and deployment. Overall, the program remains on track, and with the FSA, we hope to accelerate progress in the coming quarters. Another key development for us during the quarter was the impact of some changes in terms of bridges and road notifications in Kutch. In early part of Q4, the local administration of Gujarat has initiated road repairs and construction in a key stretch along the corridor from the Hajipir plant to the Jakhau and Mundra ports. As a result of that, we saw a significant increase in distance of transportation, which has impacted our fleet availability due to higher TAT and fuel costs as effective distance increased by 2x. As we stand right now, we understand this construction will continue till early Q3 of this financial year, after which we'll be able to come back to more normal operations, both in terms of distance covered and TAT of our fleets. The third big thing which has impacted us in Q3 has been the Middle East crisis. The US-Iran conflict has had an impact on demand, supply chain, volatility, and commodity costs in our business. The demand for bromine has increased sharply due to global demand-supply imbalance as a result of the conflict. This, of course, is now becoming normalized as end-user industries are struggling to pass on the cost increase to their customers. The cost of logistics and global freight has also increased significantly. For our basket of customers and the geographies they operate in, our costs have increased by 18 to 20% on global freight. Since late February, the sharp rise of prices in industrial fuel, our industrial fuel prices have increased by nearly 50%, and inconsistent retail availability has had a large bearing on our transportation costs, driven by the fuel increases, which have gone up by approximately 50%. Prices of other key commodities, Indonesian coal, sulfur, and propanol, have also been impacted unfavorably in the range of 20 to 30%. So in a very demanding and difficult environment, despite these headwinds, our focus has been on the key areas I mentioned in the last earnings call: stabilizing our operations, especially in terms of bromine production, ensuring market share growth in industrial salt and derivatives, retaining our key customers in bromine, driving commercial and pricing actions, and doing aggressive cost reduction to mitigate the impact of these factors. In this context, let me now cover the overall performance for the quarter and the full year on a standalone basis, as well as some of our key subsidiary divisions. Industrial salt for the volume for the quarter was 1.1 million tons, down 7.2% versus last year. Volumes were impacted by nearly 120,000 tons due to customer deferrals on account of the US-Iran conflict, and around 250,000 tons of shipments we could not complete because of logistics issues and challenges I mentioned earlier. For the full year, though, we had sales of 4.2 million tons, up by 22% from the previous year. We had earlier shared that we estimated to meet around 4.5 million tons of shipments during the year, which has largely been impacted by the factors I just mentioned. Pricing in the quarter remained under pressure versus last year and was down by around 10%, but has been kind of stable versus the prior quarter. Industrial salt has contributed 67% of the sales in the quarter we just completed. It's 67% of Q4 sales last year and around 70% in FY25-26. Bromine volume, coming to bromine volume was at around 3,731 metric tons for the quarter. It is up 53% from the second quarter of 25-26 and up by 4% versus the prior year. We continue to drive improvement recovery plan in production, and since mid-Feb, we have recovered our production levels to historical levels. During the quarter, we continue to implement pricing actions with select customers and in short-term contracts. Realization was up 14% year-on-year. Overall, elemental bromine contributed 32% of sales for Q4 last year and around 30% of the sales in Q4 of F26. The bromine derivatives business, which is housed in Archean Chemicals Private Limited, continues to scale up. Sales for the quarter were up by nearly 50% year-on-year, and revenue for the full year was up by nearly 300% compared to the previous year. While our margins remained under pressure due to the lower capacity utilization during this ramp-up phase, we estimate that our contribution margins will improve with new products and process optimization initiatives underway, supported by volume growth from some of our existing products like calcium bromide and NPBr. During the quarter, we launched PBr3 and also continue to scale up our zinc bromide volumes for select customers. Capacity utilization for the quarter still remained at around 45%, and we continue to focus on driving that up. SOP volumes in F26 stood at 644 tons, contributing to a very small level of revenue of around 3.5 crores. As highlighted in earlier calls, there are complex technical issues for which we are now defining a kind of long-term solution. This involves re-engineering of the entire product system and the manufacturing process. This program is currently underway, and we expect to complete plant trials in the first quarter of this year and go into a higher level of production in the second half of the year. As you're aware, we continue to scale up our operations in Idealis Mud Chemie, earlier known as Ore and Hydrocarbons. Over the past 12 months, we have commissioned 3 plants and are currently progressing with customer trials. Our Gujarat plant is production ready, but we still wait on necessary approvals with state authorities. For the Nagri plant in Andhra Pradesh, where we manufacture starch and packed products, we are in the process of redefining the product roadmap to better align our product with market requirements. We expect to have a fairly lean first half of this year in terms of Idealis Mud Chemie, but we expect that in the second half, we start getting to a larger ramp-up. The aforementioned issues on logistics costs have impacted the short-term profitability of the industrial salt segment. However, our customer relationships and market position remain strong, and we estimate to see a full recovery in coming quarters. with the completion of the highway projects and reduction in commodity and fuel costs as the Iran-US conflict subsides. Coming on to financial performance, to give you a quick summary of financial performance, total income for Q4 FY26 stood at 304.7 crores, a 9% decrease on a year-on-year basis. In terms of overall mix, bromine contributed 32% and industrial salt contributed 67%. Volume of sales of bromine, as I mentioned earlier, stood at 3,731 tons. Volume of sales for industrial salt for the quarter was 1.1 million tons. Overall, EBITDA reported was 66.4 crores, a 34.3% decline year-on-year. EBITDA margin stood at 21.79% for the quarter, and profit after tax for Q4 FY26 was at around 29.8 crores. The year-on-year decline in EBITDA was largely driven by the drop in pricing or the lower pricing realization and lower volume, both of which happened in industrial salt. We did also see an year-on-year increase in logistics cost, but that was largely offset by improvements in bromine, both in terms of realization as well as in terms of volume. In terms of full year performance, total revenue for the year is reported at 1,088.8 crores, a 2% growth on a year-on-year basis. EBITDA for the year stood at around 308 crores, a 17% dip on a year-on-year basis. Profit after tax for the year report was 154.3 million, that's 154.3 crores, a 17% decline year-on-year. On a consolidated basis, total revenue for Q4 was around 306.3 crores. The bromine derivative business contributed around 23.8 crores with a volume sale of around 1,400 tons for Q4. EBITDA for the company overall stood at 49.1 crores in Q4 FY26, and profit after tax on a fully consolidated basis was around 12.2 crores. From an FY26 perspective, overall revenue is 1,108 crores. Bromine derivatives business contributed around 81 crores, the volume sale of around 5,300 tons for the year. EBITDA for the company stood at 265 crores on a fully consolidated basis, with net profits of 105.4 crores. A detailed breakup of the constituent elements of our consolidated performance has been provided in the earnings deck on our website for your review. Let me end my comments by summarizing our focus in the coming year and some reflections now that I've completed 3 months in my role. As we look forward, I think we have established 3 clear strategic priorities for the company. The first one is consolidate the core salt and bromine business. Secondly, to scale up our derivatives, oil field, and SOP businesses, while we continue to invest in long-term opportunities and advanced materials, both batteries and semiconductors. The underlying focus of these priorities is to ensure that we are driving earnings quality while also ensuring effective capital allocation across the business. We are driving these priorities through 4 strategic levers. Driving focused growth, where we drive scale and volume in all businesses through differentiated products, long-term customer partnerships, and commercial excellence. The second one is operational excellence, driving productivity and growth in all our operations, especially on bromine, SOP, derivatives, and developing a world-class logistics capability while ensuring capital efficiency. Thirdly, responsible stewardship in terms of driving an inclusive and empowered organization, focusing on sustainability and supporting local communities. And lastly, technology and automation to drive increased efficiency, reduce our cost to serve, and drive agility and predictability across our business. I think together, as we look across these 4 levers, and we believe that we will continue to drive volume growth in the core business. And as we start getting some of the external factors on cost stabilizing, we should be able to get to a historical margin level of performance across the business. With this, I'll open it for Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may enter star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may enter star and 2. Participants are requested to please use only handsets while asking a question. We also request participants to please limit their questions to 2 questions per participant. You may then rejoin the queue for follow-ups. We will wait for a moment while the question queue assembles. The first question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Good afternoon, Sanjesh.
Good afternoon, sir. Thanks for the opportunity. I got few of the question. First on this freight thing, the entire long route and the higher fuel cost, how much it did really hurt in terms of the cost during the Q3? Sorry, in terms of the Q4 earnings. That's number one. Number two, bromine prices globally has gone up sharply. I know we have a long-term contract, but just to understand, how should we see the bromine prices for next year? And in your opening remark, you mentioned that we have reached the historical peak of bromine production. I think historically, quarterly, we were at 5,500 metric ton. This quarter, we are at 3,700. When we say that we have reached the peak, do we imply that we are touching that 5,500 kind of a production? And then added question to that, we have put up a blue area where we are looking to expand the brine pond, and we said that this will only enhance the production. Now, including that, what is the peak production we are looking up, and will it come in FY27 or FY28? These are my initial questions. Thanks.
So Sanjesh, I will take them in whichever order which I find I can remember them, and if I do slip a question, please do kind of remind me again. So I think firstly, as far as the logistics cost is concerned, I think simplistically put, three phases. January was pretty lean. We didn't have a big issue in Jan. But in Feb, as you've seen, we had a significant increase because of the route change, and that added nearly 100 to 120 rupees per ton of cost. And in the third month, we had both the diesel price increase and the extended route. So we ended the quarter with roughly around 200 to 220 rupees per ton in increase of cost of transportation. Okay. On a weighted average basis, on a weighted average basis across the quarter, probably around 14 to 15 crores was the impact because of the higher logistics cost, right, across the 3 months. But that's kind of the net gross number. I think as far as the second question was concerned in terms of bromine production, yes, I think, as I said, we come back to historical levels on a daily rate. I think our historical peak, I'm talking from memory, it was 5,230 odd tons in a quarter. And that quarter, was a 91-day quarter or something, but roughly, it would be around 54, 55 tons per day, and we are roughly getting back to that range right now in terms of daily production. Okay. Now, you must make, and I just would state here that we will look at modeling it out or forecasting it out. Obviously, there are scheduled downtimes, etc., which do impact a little bit, but we are in that range right now. Okay, just confirming that.
Broadly 20,000. So, so we are looking at broadly 20,000, 21,000 metric ton in FY27 if we sustain, say, 55 ton per
day. If we sustain 55 or in that range with a little bit of hit on the monsoon when it will come down a little bit, we should be in the range which you mentioned. Okay.
Got it.
And as for the third thing which you said, which I think raised to was around the brine field expansion. So as you know, we have been expanding the brine field. We remain optimistic about long-term growth. So we do expect the salt business will continue to grow at 10 to 12%. It is at a historical, it's kind of bottomed out in terms of margins in a large part because of the cost increase we've had on logistics, but that's a structural cost which will go away. We have line of sight to that kind of ending to some extent. So we continue to be bullish on salt. So the brine field expansion really will help us drive that 10-15% growth in capacity of salt. And of course, it also will allow us to be able to produce more liquor for bromine volume as well.
So what are we looking at bromine then in an expanded capacity? Because we had
to
500. We are struggling at 20,000. So how should we look at the journey from here to the nameplate capacity?
So I think that's a mixed question, right? Because there are multiple factors involved, but I do think that we are expecting or hoping to be able to grow 15-20% a year in terms of bromine production. I think that's what we had mentioned last quarter as well. What I said last quarter, our next pit stop, if you may, is to try and get to 25,000 tons. And then beyond that to, over a period of time to 40,000 tons. And that's kind of what I would really still be anchoring our business on in terms of what we are trying to establish as goals for the company. The 40,000 ton expansion obviously happens along with the derivatives business growth as well. So it kind of happens hand in hand. But that's kind of where we're anchoring it at. Now, is it sequential? Is it year-on-year? There are multiple factors involved. The brine fields themselves are being expanded now. It'll be 6 to 9 months before we finish the expansion, and then an entire season before we actually fill the ponds, and we actually have enough condensation, evaporation to be able to basically draw them out as liquor and as salt and crystallization. So it's a stage period, Sanjay, but the key thing for us has been to start putting capacity ahead of demand and start making that move, and which is what we're doing right now.
Very clear. On the pricing, bromine pricing, because globally bromine...
Oh, yes, on the bromine pricing. Yeah, sorry, I missed that question. Yes. So I think as I mentioned, yeah, we had a question last quarter as well, and probably had it earlier as well. I mentioned that we are making pricing actions. So you've seen some impact of that in Q4 on a year-on-year basis, where we have increased the prices on contracts. Obviously, prices went up in a short period of time very quickly. But I think as we look at currently, we have, I would say, renegotiated a large part of our long-term contracts, right? I won't put a specific number on it, Sanjay, but we have negotiated a very large part of our long-term contracts for this year. So we have also gone back and reopened or rediscussed with customers on contracts which still had open windows on them, and gone back and renegotiated some of them back as well. So today, I think as we stand, the majority of our bromine contracts stand renegotiated upwards. I will not put a specific number on that, Sanjay, but that's kind of directionally at least where we are going.
Got it. One on the Archeans, we had not a great year last year. I thought the ramp-up expectation was much better than what we have delivered. So what are the things which have not gone in our favor, and what are the measures we are taking to see that Archeans really scales up to the level where probably which is more satisfactory? And number two, what's the plan on the flame retardant? It's still under discussion, or it is rested for a while? How should we see that?
Okay, so I think for Archean, there's no question that it has been a year where we've had growth, but we've not had the growth we expected, right? And I would say 2-3 things are the areas I think we have kind of been challenged with. I won't say there have been things we have necessarily done badly on, but they've just been challenged. I think the first one has been product development. Some of our products, especially targeted towards pharma applications, have been a little bit longer cycle than we expected them to be, Sanjay. And that's actually taken a little bit more time to get, it can get converted into specific orders and pull through. The second thing which has been a challenge has been, in terms of, commercial pricing. I think we have had to work hard on getting pricing in there. You're an entrant into the market, you're an entrant in an established market where other players are there. So that obviously puts pressure on you on pricing, right? And probably we've been forced to have slightly more aggressive prices than we probably would have initially expected the same time last year. The third thing which has been a challenge to some extent has been that, obviously the Archean business gets its bromine from the Hajipir business. And some of our challenges in the second and third quarter on bromine production obviously translated into a ramp up at that business as well. Okay, so what are we doing to fix that? We are fixing exactly the 3 things I spoke about now. We have deepened our sales capability. We're expanding both in domestic and exports. Our channel partnerships. We're also accelerating product development. So in Q4 alone, as I told you, we upgraded the zinc bromide product. We launched PBR3. We are looking at releasing a couple of more alkali bromide products in the first half of this year. Right. We've also been expanding on CBR, CABR and NPBR3 volumes, which both, which obviously are large markets in terms of the oil field and the ag intermediate usage. So more market penetration, more product development, more consistent supply of bromine from the Hajipir plant. And lastly, we are working a lot in terms of process optimization and process costs. So we actually have to kind of be able to drive that. I'm confident that I think you will see a step change in a significant improvement in the business as we drive that product utilization improvement starting in the early part of this year.
Very clear, sir. Just one last, sorry, I'm pushing it late.
No.
On the semiconductor, can you just help us the milestone from here to the production, What is the time frame and the key milestone we need to track? And
Rajiv, you want to take it?
Yeah. So Sanjesh, let me take this question. So we have started working on the design aspect, and the early work we have already commenced. Our target is to start the substructure work from July, and broadly it should take 24 to 30 months from that time.
24 to 30 months from now, or
From July.
Right.
from July? From July of last year, right?
July of this year.
So from July of this year, we are looking at 24 to 30 months.
Yeah.
So Sanjesh, so if you index the period from now to July, probably 27 to 30 months roughly is what it will take.
Got it. And just one bookkeeping question. What was the SOP volume and revenue for this quarter?
For this quarter, I will have somebody drop you a note. I think I mentioned the full year number, but if it's okay, I'll have somebody in our team
The full
email
year
it.
number, full year number is fine. What was the full year?
Full year was 3.5 crores and 650 tons.
650 tons. That's
664, I think, was the exact tonnage.
okay.
644 tons and 3.49 crores.
Thank you, sir. I think that is all from my side, and thanks for patiently answering all those questions, and best of luck for the coming quarters.
Thanks, Sanjesh.
Thank
Okay.
you.
Thank you.
The next question is from the line of Aditya Khetan from Smith's Institutional. Please go ahead.
Yeah, thank you, sir, for the opportunity. Just a couple of questions. Sir, you mentioned in your opening remarks onto the competitive intensity pressures. Is that, sir, one of the reasons why we are not able to increase the bromine prices? Because, sir, when we look at the spot prices of bromine over the last 3 quarters versus Archean's realizations, there has been a stark difference. Actually, spot prices have gone up in one way. But our realizations look almost flattish only when we look at the last 2 quarters data also. Is it because of the competitive pressures which you have mentioned, is that stopping the prices to move higher? And secondly, sir, when I heard your commentary onto the bromine volumes, you mentioned about some 10 to 15% growth. But sir, when we look at this number, 10 to 15% growth would still be around some 16,000 tons only for FY27 also, versus what earlier management was guiding around 22 to around 25k tons for FY26. So there is a stark difference into the numbers which earlier management was guiding and what we are seeing for FY27. Any thoughts of what has changed materially into the business over here?
Let me answer those questions a bit more specifically. And then, so firstly, I think on the bromine pricing, it's not a competitive intensity issue as much as the fact that, as we mentioned earlier as well, Aditya, we have a fairly large constituent of long-term contracts. These are contracts we enter typically with annual pricing. And since we enter them with annual pricing, we generally don't change the pricing based on spot conditions too much. So 70% to 80%, let's say 70% of our business is long-term contracts. 30% of our business is short-term contracts, which is deal-to-deal pricing, right? And therefore, what you will always see is that when the prices go up, it takes us time to catch up. When the prices go down as well, we get the benefit because our customers continue to buy at the old prices from us, right? So and therefore, what's happened in the last 18 months is 15 months roughly has been that prices have been inching up slowly till around February March when prices went up substantially, right? We have taken the opportunity to go ahead of the curve this time in Feb and March and kind of even start renegotiating our contracts ahead of their closure. And that's why, as I mentioned to Sanjesh earlier on, when Sanjesh's question was there, we have repriced now a majority of our contracts upwards. And therefore, I think you will see that being different going forward. That said, I think you must bear caution that spot prices are always not a very good reflection of the overall blended price of the market. Typically the entire industry on bromine works 60 to 70% on long-term contracts and 20 to 30% on short-term contracts. So when suddenly one company suddenly has a shortage of bromine or has a production problem, then those customers that signed long-term contracts with them become spot customers in the market. They often buy at very, very high prices because they have to manage their end customer contracts. So always spot prices are not a reflection of the blended average price for any company. And so we always encourage people to look at what people are reporting. Right? Don't look at what the landed Shanghai index tells you or the landed China index tells you, because there are the short-term elements there. There's logistics pricing, there's transportation, there are multiple factors there. But broadly, we have gone back and renegotiated the majority of our customer basket. And you should see some of that pulling through. As far as your comment on the bromine volume, I think let me restate what I said. Sanjesh's question was, are you back to the 55 tons per day level? And I kind of said, yes, we are roughly at the 55,000 tons per day level, which adds up, which is around 21,000 tons. And I said, our goal next year is to probably 15% above that. Right? So this year is to be at that level, and next year is to be at around 15% above that, which gets close to 25,000 tons number, which has been quoted earlier. And lastly, Aditya, on a lighter note, I would just like to tell you that the management has not changed. The management has expanded. The earlier MD remains as the executive vice chairman of the company, and therefore the management has expanded. It has not changed. So we still are very much committed to the numbers which has been shared by Ranjit and others earlier.
Just one more question, sir, if I can squeeze in. So this quarter, we are seeing some 13 crore of increase into the stocks, which is reflected into the COGS. Can you highlight what this change is actually? And second, if you can provide the internal sales volume of bromine for whole fiscal FY26, the captive consumption of bromine.
So I think the second one, I think I will have to get back to you. I don't have a specific number right now, Aditya. If you can drop a mail to us, our team will respond. Okay. As far as the first question is concerned, the 13 crores, I think as I mentioned in my opening comments, we had initially also kind of hoped to do slightly higher volume of tonnage of salt in the quarter. And we are not able to do shipments because some orders got deferred. And also we had an issue where we had, because of logistics costs, we could not fill those volume. And therefore, finished salt inventory increased during the quarter. And that is a substantial part of what you will see there as an increase in inventory cost.
Got it, sir. Thank you, sir.
All right. Thank you.
Thank you. The next question is from the line of Avnish Tiwari from Vaikarya. Please go ahead.
Hi, am I audible?
Yes, sir. Please go ahead.
Hi, Avnish. Yeah, please carry on.
Yeah, hi. You were mentioning in context of bromine demand that it increased, and then because the end industry is not able to pass through the pricing, the demand sort of getting rationed out or getting normalized. Can you expand on that commentary? And will that be a hurdle for you? I mean, you have already renegotiated the long-term contract, but if you can give us a color around your 30%, which is deal-by-deal business, how is the pricing there in relative to your long-term contract versus the spot, which I know is not real, is much higher? Is it in the middle of these two, spot versus a long-term contract, or more closer to your long-term contract? So these two areas that you can expand upon.
Sure, Anish. So I think let me just start off with probably a more external-facing number, which everybody likes to quote, but that's at least generally a thing that's. So I think, as you know, when shortly after the crisis started, bromine prices went up around 70 to 80,000 RMB. Right, which is almost like $8 or $9 per kg. It went up that high because there was a sudden shortage of bromine in the demand, of bromine supply in the market. Our end users, like companies make flame retardant, etc., has their supply contracts to honor. And so there was a sudden, because of the shortage of supply, they had to basically buy at whatever, and so spot prices went up. Obviously, what most of those end customers are finding is that is not sustainable for them to price it to their users. And therefore, there has been some softening in terms of their end users pushing back and not accepting price increases, and that coming back through the chain to us as well. And therefore, there's some amount of softening. And today, if you look at it, I think prices have come back to around $5 per kg, $4.5 per kg. And then depends on how much transportation, etc., you consider in it and how logistics is. Right. So you have that. So you have this thing which is seesawing because of that issue. And you must remember, we make an intermediate which goes into a product which then goes to the end user. Right. So the entire value chain has to absorb the price increase. The first increase which happened was a supply-led increase or supply shortage. That is normalizing itself because that price is not being passed through fully. Okay. That said, I do believe that our prices will reflect the broad movement in terms of market pricing going forward. Okay? Right? So that's, does that answer your question?
Yeah, that's good.
Thank you.
You were also mentioning that this short-term deal-by-deal pricing, is this more closer to the long-term pricing or this more closer to the spot, which is $4.5 per kg?
No, so in general, short-term pricing is closer to spot. Okay?
Okay.
And obviously, long-term pricing is driven by multi-year relationships we have and markets we want to play with. We don't want to have geographic concentration in one geography. There are multiple considerations, Avnish. What are the end user industries, flame retardant, right, pharma, etc. We want to position our product in oil field chemicals. What's the geographical diversification we want to have? Right? What is the customer concentration in terms of what's the synergy benefit a customer brings across bromine, across derivatives? So there are multiple factors, but spot is generally closer to market.
The second question which I have is that if you look at your supply shortage, you said has now reduced. This other supply of bromine which comes from locations which are under stress right now, has that supply now normalized, or that supply is still under not normal? Or
I think that supply is still trailing probably what the past levels were. It is still trailing that. Obviously, there have been challenges. Your new supply routes have emerged, right? But I would still say that there's still a gap in the market demand supply.
The Israel supply, has it been affected, or that Jordan, Israel has not been impacted?
I mean, to be fair, it probably would be unfair to just speak about a specific geography because in each geography there are large companies which are at play and large players. But I would say generally, I think if you look at trade route volume, Avnish, I think there is still a gap, right, on those trade routes compared to some of the volumes pre-conflict.
Okay. So there is still a shortfall, and demand rationing is what is bringing the pricing down. Otherwise, it would have been much higher price, right, effectively.
No, well, again, the point you must understand that, there is, because most of the industry works with long-term contract pricing, whenever there's a small dip in shortage and also sells long-term, capacity gets sold and blocked on a long-term basis. Effectively, spot capacity, which gets traded all the time, is only 20% or 25% of overall capacity. So if one manufacturer suddenly, right? So that's the impact which happens.
Very well. If I can squeeze one more. If you were to look at your numbers, standalone versus consolidated, and there's a loss between these two because of this other businesses you have, can you articulate where these numbers might go, let's say in terms of EBITDA or revenue in 1 or 2 years' time? I mean, I know you mentioned a lot of steps you are taking.
No, I don't. We don't make forward-looking statements. So I will probably I'll take an exception on that. But not going to I won't be able to give specific guidance on those.
In the past, have you given the guidance around break-even points when you can achieve there, or any what metrics you can track?
No, we don't. We don't really provide specific guidance to that level of detail, Avnish.
Okay. Yeah. And maybe the last piece of
I'm sorry to sir, please, Mr. Tiwari, please return to the queue. Thank you. Participants, please limit your questions to only 2 questions. We have several participants awaiting their turn. The next question is from the line of Chirag from Keynote. Please go ahead.
Hi, Chirag. Good afternoon.
Yes, Chirag, please go ahead.
Yes, thank you for the opportunity. So first of all, I would like to understand the reason of significant volatility that is taking place in bromine prices. It has been from almost $5,000 per ton to almost 9,000, 10,000, and now it is reverting back to almost 7,000 if I'm not wrong. So just wanted to understand what actually brings such kind of volatility in the market.
Okay. Share all your questions. I'll answer them all together.
Sure. My second question is related to as crude prices have started inching up from the earlier $65 per barrel rate. So are we seeing new drilling activities taking place due to which the the mud chemies, Orion hydrocarbons business is actually starting seeing some new revenue to come into picture from this particular area. And there are some bookkeeping questions. One is, what actually comes into intangibles under development when it is getting highlighted in our balance sheet? And were there any revaluation taken place on raw material levels?
I'll try and answer the first one and then Natarajan to answer the next two, right? But I think what drives bromine pricing, as I said, I'm mentioned a couple of times, the way actually broadly the industry works is that it basically the buyers and sellers in the industry tend to work on long-term contracting for a large part of their requirements or the large part of their production. And therefore, what happens is the majority of the market still transacts on that long-term pricing, right? So, for example, if you and I have a contract and we have signed a contract that said $3.50 per ton, and you signed for 75% of your volume requirement, and I signed for 75% of my capacity, that volume still transacts at a long-term price only. What happens is that there's a sudden imbalance which comes either because of a sudden spike in demand or a sudden shortage of supply, then that puts pressure on the market, and that pressure gets concentrated around the spot business. So if there's a sudden spike in, if there's a sudden shortage in supply which happens, then what happens is that you have to go and still buy your bromine from somewhere. You tend to go and buy your balanced bromine, which I am not supplying on the long-term contract, at whatever price you think you can afford, and that pushes the prices up, right? And therefore, what the industry tends to hear as volatile prices is basically only spot prices. Spot is a fraction of the market, right? And we kind of try to make an effort to consistently remind that the spot is only a fraction of the market, but that's actually where you see all the volatility. You don't see a volatility in the majority of the market where there's a lot of movement happening. So that's the question around that. Do you want to, Natarajan, do you want to talk about revaluation?
Raju will explain. So the second question, which was intangible asset under development. So 6M actually is doing a pilot line for wafer manufacturing at IIT Bhubaneswar. So whatever capital we have spent there so far is under intellectual property development. At the same time, there is a technology transfer agreement with Classic Wafer Fab. The expenditure committed towards that so far is also under IAU deals.
Got it. So two more questions. One, crude prices movement, and are we seeing any positive development related to trials for mud chemicals? And second was related to revaluation of
Yes, I think mud chemicals, I'm sorry I missed that question, but I think right now, I mean, the oil and gas demand is still fairly muted because a lot of that's based in the Middle East, and therefore I don't think we have seen anything tangibly move in terms of short-term demand. I think the view is that once the war subsides, then obviously we'll go through reconstruction phase, and that should give us a flip in terms of demand.
Got it. And related to that, any revaluation on inventory because there is a significant shortage. Is it just not the industry, coal and
no revaluation on the inventory.
And what would be the capex or debt level? What kind of debt level are we comfortable with at company level?
We don't make a specific view like that. Our view is that capital discipline is about investing in projects which have got good returns. We are growth oriented, and therefore we would continue to look at investing in high growth return projects, which also means that we have to scale up our existing businesses and deliver the right level of returns from them.
Fair enough. And so one thing.
I'm sorry, sir. Please return to the queue, Chirag, sir.
Sure. I'll come back in.
The next question is from the line of Rohit Nagraj from 360 ONE Capital. Please go ahead.
Yeah, thanks for the opportunity. So I'll ask all the questions together. So first,
thank you.
On the bromine. Yeah, thank you, sir. On the bromine pricing, so I understand that the long-term contracts would be either calendar year or financial year, and probably both would have consummated for the next year. So what is the kind of pricing range that we are looking at? And I'm not looking at a specific number, but a range would be helpful in terms of building in for the estimates. Second thing, on Oren Hydrocarbon, when we acquired, we had an estimate of 150 crores of revenues. When are we likely to reach that mark? Any timelines broader timelines would be helpful. Third is in terms of industrial salt, you said there is pricing pressure. I was unable to get the exact point because NUHS is an export-oriented business and the realizations in terms of dollar terms are certainly, in rupee terms, certainly would be better because of the depreciation. And last one, bookkeeping question. What is the cash as of 31st March on the books? Thank you.
All right. So I'll ask Natarajan to answer the fourth question, but let me try and take the first three. So I think, so I'm going to award you a range as well on bromine pricing. I think, as I mentioned, we have gone and renegotiated a majority of our contracts, even if they were not expired. We have gone back and renegotiated almost all our LTCs off, right? We've gone back and spoken to customers. I mentioned that we'll do this in the earlier call as well. And so we have kind of completed a majority of that. And therefore, I think you see the flow through of it. However, we really don't give very specific guidance on pricing for reasons you will understand, okay? Because it's right. And therefore, I would avoid giving a range as well. But as I said, we will see flow through impact as we've done that action. As far as Oren Hydrocarbons is concerned, I think we had given a guidance of 150 crores. It was basically divided across three products. Bentonite, which we make in the Mandvi plant in Gujarat, barite in a plant in Kodur, and the third one has been around starch and fibroseal products and pack products, which we make in the plant in Andhra Pradesh, in a location called Nagri. Around 40 to 45% of our volume was supposed to come from the bentonite product in Mandvi. That plant actually has been we have to work with government on getting licenses cleared and approvals done. Unfortunately, the Gujarat government interprets some of the NCLT provisions or orders in a slightly different way, and we are working with the local government authorities to get aligned on that, and right now the hindrance in starting the plant up, right? And that's actually what's affecting it out. The remaining part of the business, which was around half that 150 crores, which we indicated, right? We have some challenges on retuning the product line. The markets have obviously changed a little bit, and therefore the product composition is slightly different. So we have developed new products in those plants. Those products are actually under customer trials now. Obviously, those products are highly focused on the oil and gas market. And given the sluggishness has happened recently and now the crisis now, I'm not sure when we'll actually see a recovery there. But as we go to this year, in the second half of the year right now, we hope that basis where we are executing right now on various fronts, we expect that at least 2 out of the 3 plants will be in operations at reasonable volume in the second half of the year. Just on industrial salt, I think on industrial salt, I think the way I tend to look at this is we supply a lot of our salt goes into South Asia and Southeast Asia, right? And as you know, in salt, the longer you go, the further you go away from India, the less competitive you are, right? So we sell a lot where we sell to markets in South Asia for high grade applications, where this requirement for NaCl content is very high, where the customers need to pay a premium for low insolubles, we actually get very good pricing. But when you go into in some of the geographies like China, we are competing also with locally manufactured salt, and salt comes from other geographies which are geographically far closer to the end market, and therefore we get more pressure on pricing because of that, right? So as we're trying to, so that was my reference to my earlier comment saying that obviously that there's competitive intensity. It's by geography, it's different, and the competitive intensity in each geography determines the weighted average of our pricing in our basket. So there are long-term customers where we have not seen price coming down too much because they are, let's say, in Indonesia or they're closer, or they're an application where they need a very high quality salt. But then there are customers who are very far away from India and are ready to use a slightly lower quality salt in their application, and there we see more pricing pressure. Yeah? And that's kind of the balance which is there, and that's what drives broadly the contours of pricing in the market. Okay. With that, and obviously, if the geographical demand, and then demand in those geographies or those customers are growing very fast, we see benefits. If they're not growing, we obviously see some impact of that as well. Okay. With that, let me just let Natarajan answer the bookkeeping question.
Yeah. The standalone cash equivalent bank balance is 37 crore and consolidated is 55 crore.
Sure. Thanks for answering all the questions, and all the best, sir.
Thank you. Due to time constraints, that was the last question. I now hand the floor over to the management for closing comments.
All right. Well, thank you everyone for joining us in the earnings call. We appreciate your time and for showing interest in the company. In case of any queries, you can get in touch with our team or with SGI Investor Relations Advisors. We will turn back those questions very quickly. Right. We look forward to meeting all of you over the next call. Just as a point of interest, we have scheduled the date for the AGM, right, which is on June 12th. And hopefully, if those of you who are able to make it, we'd love to have some of you members join us at the AGM as well. All right. Thank you very much. Take care. Stay safe.
Thank you very much, sir. On behalf of Archean Chemical Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.